Good afternoon, students. So this is the second video for class 10, where in last video we have come to know that the final account have been divided into three sections, that is trading account, profit and loss account, and balance sheet. So in this video I will show you the format of trading account, profit and loss account, and balance sheet. Trading account and profit and loss account have the same format, and the balance sheet have some separate format. So I will show you. So this is the format of trading account. So trading account for the year ended, suppose the company has ended the year in 31st December, so we have to write like this here ended 31st December, suppose 2019. On last video also I said that trading account and profit and loss account have to make the entry for the year ended. So like this, trading account for the year ended 31st December 2019. If some company closed their account at March, then you can write 31st March 2019 or 2020, whatever. So in accountancy we can take both the year, that is the accounting year and as well as a calendar year. Accounting year start from 1st April, end at 31st March, and the calendar year start at 1st January and end at 31st December. So like this, suppose it's a trading account, and in trading account we have the two sides, that is the debit side and the credit side. In debit side we will put all the expenses, okay? But what type of expenses? That is the direct expenses. And here the direct income. So direct expenses. So what are the direct expenses or direct income? The direct expenses or direct income are those expenses and income which is directly related to the manufacturing of a product. Manufacturing of a product. So in debit side of a trading account, at first we have to write to opening stock. So what is opening stock? So opening stock is nothing, it's the closing stock of last year. Suppose I have a company or a manufacturing unit where I purchase a raw material, but this year at the end I supposed to have some raw material which is not used. So for this year I will sacrifice this as a closing stock. But when next year, that is on 2021, I will start my business. So this closing stock of 2020 will become the opening stock of 2021. So this is the opening stock. We will always place on debit side of a trading account. Now the next is to purchase. Here purchases means, though we have the opening stock of closing stock of last year, but we have to purchase some new raw material. So new purchasing of raw material. See, the purchasing of raw material and the closing raw materials, this all are the expenses which relating to the manufacturing, okay? So we will incur here all the expenses which is relating to the manufacturing, that is the direct expenses. So purchase. Now wages. Wages is used as in term of salary. While we gave a monthly subscription or a monthly basis, this is called a salary. But the one time which we pay to the some vendor or not vendor, some worker, we say it's a wages. Or in local language we say the hajiras. Okay. So now, so these are the few entries of debit side. Now I will shift to credit side. So in credit side we will have buy sales and buy sales. So what is sales? After manufacturing, the sale is a direct income of the manufacturer. We manufacture one thing, so for the cost which will incur, it is called the manufacturing expenses, and after manufacturing, if we sell something, it is called the direct income of the business. By selling the manufacturing product, the price which we will receive is called a direct income. So in direct income, the first will be the sale, and the second will be, or the last will be, closing stock. So now the closing stock of this year will be your income, because next year you no need to purchase this. Next year you will get this as a opening stock of your direct expenses, but this year this closing stock will be your income. Okay, because you purchase something and it's balance, so balance means your credit side, it is the income. So these are the two entries which will come in the trading account, and these are the entries which will come in the debit side of the trading account, and this is the credit side of the trading account. So what are the opening stock, purchase, wages, many more are there, we will see in the practical, but for your understanding. And in credit side we will have the sales and the closing stock. Okay, this is the second format for the profit and loss account. See, here also in the debit side we will post the expenses, and in credit side income. But here we will post the indirect income, the income or the expenses which is not related to the manufacturing. Suppose the first entry is, suppose the salary. Salaries. So salaries, what are the salaries? Salaries is the amount which we pay to our employee. Okay, so if we pay to our employee, this is not the manufacturing. Yes, employee are related with the manufacturing process, but their salary we can't take as a manufacturing expenses. So this we will take as a indirect expenses. Indirect means which is not directly related to the manufacturing of any company. Then suppose to advertisement or trade expenses. To do some trading or business, the expense which you have to face, this is called the trade. Suppose the advertisement, then the commission, then the discount, this all are come in this, etc. Okay, and the rest entry we will come to know, but I am giving you the hints only. All the general expenses except the expenses of the manufacturing will come in the profit and loss account debit side. Now in the credit side we will take the income. Suppose by what? Discount receipt. When you are going to purchase something for your office expenses, this is profit and loss account is for office expense, and trading account is for the factory expenses. Okay, so now when you when you go to purchase something for your office, suppose a furniture or something, and you receive some discount on it, so the discount which you have received, this is your income. So this is the indirect income which is not related to your manufacturing. This will come next. Interest received. Interest. Suppose your company has made some investment, and from the investment, if any interest arise, or from the bank, this is called the interest received. So this is also the income of indirect section. This is not the direct section. This income is not coming from the manufacturing. The income which will come from the manufacturing is only sale, and is only sale. Okay, and the rest all the income it will be in profit and loss account credit side. Okay. Okay students, so this is the format or the specimen of balance sheet. So when you write the balance sheet will be on as on. As on means for the particular date. Suppose the 31st December, year may be 2019. Okay, so in balance sheet we have two separate sides, that is the liability and asset. In balance sheet we will never write the debit side and credit side. Balance sheet have no debit and credit side, it have the asset and the liability side. So liability means liable to pay, which the company have the liable to pay, and the asset means the asset of a company, which can be sales or from which they will get the value. Here asset means they didn't get the value, they will get the value after the sale or the export. And here liability means they didn't pay the liability, they have accept the liability and they have to pay. Okay, so now in the liability side, here you can see in the liability side we have the current liability. Current liability means the value of liability which fluctuate day by day. Then the long-term liability. Here long-term liability means the long-term means the loans which the company has took for a long period of time. We will post all the entries of the long period of time loans here, and the fluctuate value of liability here. Suppose the creditor and so on. Suppose the last is a capital. In capital we will have to show how much the capital have been given by the company want to start. So why the capitalist liability? Yes, capitalist liability because this is the format of a company. Company is liable to pay the capital to its owner. So this is the liability for the company. This is not a liability for the owner. This is a liability for the company. Whenever you will make the accountancy entry, think yourself as a company, not as the owner. So as you a company, you are liable to pay the capital to the owner. This comes the liability side. Now the asset side. In asset side same, we will at the first we will have the current asset. Current asset means the value which fluctuate day by day. Then we have the investment. Suppose investment which you have suppose you have done an investment in some other companies or something. So this is your asset. And last is the fixed asset. What is the fixed asset? The asset or the asset which the company purchases for a long period of time, and after selling they will get some value. Suppose the building, machinery, furniture, then the fixtures, so on. So this is the format of balance sheet, and on this video I have given on the balance sheet format, profit and loss account format, and trading account format. So thank you student. So this is a video for your valuable classes in lockdown. So please share, subscribe and press the bell icon to get a further notification. Thank you.